Coming up today, stocks finish flat. A look at Buffett's latest moves. Who just bought Tesla? Retail sales slump. Another wealth fund buys Bitcoin. And what happened to robotics stocks today? It's been a monster week, guys. Let's finish strong. Hey, I'm Jared. Welcome to Click Capital. Welcome to Click America. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain you, but also to educate you. So don't call me on 1-800-CLICK-CAPITAL, tweet me at Click Capital. All right, guys, just a bit of lighthearted fun heading into the long weekend here. And before we get stuck into the daily market review today, I just want to start off by saying thank you to everybody for your feedback. I obviously struck a chord with many of you yesterday as I revealed the tactics of one popular financial YouTuber who, in my opinion, is profiting immensely by being a part of and enabling penny stock pump and dump scheme, convincing innocent and vulnerable people to buy absolute garbage stocks for his own benefit. I also had a few people reach out to me and email me some stuff from inside the Discord rooms of both Meet Kevin and Zip Trader, showing me some very shady stuff they've actually been doing. Kind of amazing what they've been getting away with so far. And so if any of you guys out there are paid members with any other popular financial YouTubers and they're doing dodgy stuff, email me at support@clickcapital.io with it and we'll continue calling them out on here going forward and do a bit of community service to try and clean up the online trading industry for everyone's benefit. So there's less innocent people, those new to trading, those a bit younger, and maybe those that are vulnerable. Hopefully there's less of them that fall victim to some of these online fake gurus who lure them in with their BS. And at the end of the day, I'm just trying to make online trading great again. Anyway, guys, relax. We're heading into the long weekend here. It's been a monster week on Wall Street. Markets close this Monday for President's Day, and we've currently got S&P 500 NASDAQ actually sitting at all-time highs, while bearish sentiment is still elevated. Was a bit checkered again here on the heat map today. Spots of green and red all over the shop. But like I said, looking at the S&P 500, we are pretty much sitting at all-time highs. Came within a point of taking them out today. Like I showed you guys yesterday, equal weight NASDAQ broke out to a brand new all-time high. Long-term trends across the board are green, especially international stocks really come back this year. China, Brazil, quite a few others. Whilst we've got volatility, yields, and oil in a downtrend. VIX pretty low actually, now down on a 14 handle. And just looking at the VIX 9-day, it's really been crushed, 11.5. Volatility getting sucked out of this market again. That's another bullish signal, and on this super low range today, low volume, people can often misinterpret that as being bearish. However, I'd say more of the time that's bullish. The market can quite often just grind higher on these really low range, low volume days. It's typically the red candles where we get the volume. And so even though indices have pretty much been consolidating and flat for a few months, we've still got mid caps, small caps. A lot of the market's still quite a bit off highs. Tech's really come back this last week. Looking underneath the hood, we got some growth names absolutely ripping Robinhood this week on their blowout quarter. I think it's pretty significant for not only the company, but the market as well. And a lot of participation is good for a bull market. And that's why we also saw Coinbase doing well. And stick with me today because I'm going to talk about another stock later that I think could potentially turn into the next Robinhood, as it's got quite a few similar characteristics with Robinhood, and it's actually having a massive breakout today. So we'll dive into that one later. However, let's just start off talking about one of my favorite themes in the market, robotics. Quite a sharp pullback we've got there today. Tesla was pretty much flat, but we had some big falls and Serve Robotics. One of the leaders in the small cap space for robotics was actually pushing up against resistance zones yesterday and had a bit of a sharp fall today on news, which I'll get into in a minute. But this just goes to show why position sizing is important. These are still really speculative stocks, very volatile, and news can come out at any time like this, up or down. And so it spooked the entire sector of robotics today. And so we'll get into that for a little bit here, and I'm going to give you my opinion on the news and whether this is something to be worried about or whether it's potentially setting up for another buy the dip opportunity, with the possibility to still get in early on potentially the next big thing in the market as this AI bull matures and evolves. Could be coming out of that stage 1 AI infrastructure build out. But anyway, what the news was, that also caused SoundHound AI to have a pretty sharp drop today as well. In addition to Serve Robotics, was moves by NVDA, in which they completely exited their investments in Serve Robotics and SoundHound AI. We just got their latest Form 13F, and instead they added 2 new positions. WeRide, autonomous driving coming out of China, and a stock we've previously featured here, Nebius Group, AI stock coming out of Netherlands. And they also trimmed their holdings in ARM, British chip maker. As that caused a little bit of a pullback in ARM, bit of a pop there in MBIS, and absolute rip and WeRide, 4.7 billion market cap coming out of China. And China has been really hot of late in the market. I'll show you guys later on a few other Chinese stocks that we're watching here. But anyway, that's what spooked the market for SoundHound and Serve Robotics. Keep in mind, they were pretty small positions, 3.7 million shares. On a $20 stock, there's only around $70 million or so. And in SoundHound, they had 1.7 million shares. Again, on a $15 stock, we're talking like 25 million, 30 million or so. Relatively tiny numbers. I mean, NVIDIA's market cap changes more than that every second. However, the headline, as usual, enough to spook the market, and deservedly so. Stocks deserve to be marked down, as that can be interpreted as a loss of confidence from a key investor, for sure. However, NVDA didn't say exactly why they got out of them, and we actually heard spokespeople from both Serve Robotics and SoundHound AI today reiterate their relationships with NVIDIA as a technology partner. And Dan Ives, Webbush analyst, has called SoundHound a long-term winner in the AI revolution. And so these sort of headlines and movements, these are the things that cause the pullbacks and corrections in stocks, especially high growth stocks that inevitably attract so much hot money. And as they're all price driven, they inevitably get shaken out on all these pullbacks and corrections. However, like I said, NVIDIA could have sold them for any number of reasons. It may not be that they don't like the companies, but they've got a certain budget and they'd rather invest somewhere else, just like us as investors do. They may be looking at developing competing products or forming new partnerships with big customers, and there could be conflicts of interest. Doesn't mean these companies are going to go out of business anytime soon, just because one investor, and yeah, a notable investor, pulled out. So those headlines with NVIDIA's portfolio shuffling definitely spooked the market for robotics stocks today. However, we also got some news today that in my mind, whilst not immediately impactful like NVIDIA's moves, long term this is another big green light for this sector. Meta, one of the most profitable cashed up companies in the world, plans major investment into AI-powered humanoid robots. Meta plans to work on its own humanoid robot hardware with an initial focus on household chores. Its bigger ambition is to make the underlying AI, sensors and software for robots that will be manufactured and sold by a range of companies. Meta has started discussing its plan with robotic companies, including Unitree Robotics and Figure AI. So this is a pretty big deal, and it's good. There's more capital going towards this industry. There's more activity. It's going to be more headlines. And the company Meta is partnering up with could arguably be the second largest manufacturer of humanoids after Tesla, Figure AI, which we just so happened to get news from them as well today in discussions for a $1.5 billion funding round, potentially valuing them at $39.5 billion. That's huge. Remember, Rich Tech Robotics that I'm invested in currently only has a market cap of $340 million, not even $500 million. And here's a look at the Figure AI website. Figure is the first of its kind AI robotics company, bringing a general purpose humanoid to life. And like I said, on some rankings, this is not too far behind Tesla's Optimus bot. And so we're already starting to see these things in factories. They're really going to help out production lines. And then wealthy consumers will have them doing stuff around the house. So it's going to have huge impacts on both businesses and consumers. And cheaper AI is only helping to accelerate this inevitable trend. And so this will make businesses and all our lives more efficient, just like plenty of other technologies have already done for us. Think about the washing machine. People don't realize 100 years ago, the average person would spend a lot of time washing their clothes manually by hand. It was a laborious task. Now we just all throw it into a machine, press a button. And so think about how many other household chores or just general chores in a workshop or factory that we can outsource to a machine. And now with humanoids that, just like the name suggests, will have the same dexterity as actual humans with fingers and eyes powered by AI that helps them to understand their environment the same way we do. And we also just heard a couple of days ago that Figure AI is dumping OpenAI deal, who they've been partnered with, instead saying they're going to show something no one has ever seen within 30 days. The US-based startup focused on building AI-powered humanoid robots severed its ties with OpenAI last week, with the CEO claiming a major breakthrough in robot intelligence that made the partnership unnecessary. I mean, this is interesting timing. We just saw DeepSeek, which is an open source LLM released a few weeks ago. Has this company switched over to them from OpenAI, which would be a pretty big deal. One of America's most innovative companies switching over to Chinese technology. However, that's just my speculation at this stage. May indeed not be true, but let's see what the CEO comes out with. And just looking on the smaller end of town with Rich Tech Robotics, they just launched their own coffee shop brand, Clofi and Tea, opening last weekend at the Town Square Shopping Center in their hometown of Las Vegas. That's their signature product, robot barista named Adam, serving up drinks, also with humans there to make other items on the menu, such as food, whilst Adam is making drinks. Initial reports that it's been going well. They also just did a secondary $200 million, given plenty more runway as they're not yet profitable. But their debt structure looks good, most of it not due to 27, 28. And this comes on the back of a leasing deal last year. The company added 20 robots to ghost kitchens inside Walmart stores. On top of that, they deployed more than 300 robots throughout the US, performing tasks at restaurants, retail stores, hotels, healthcare facilities, casinos, senior living homes, and factories. And so they have many different types of use cases. It can be used in a lot of different industries. Like I said, very early days. Still got a while yet before all this becomes mainstream. But they are talking about the possibility of opening more of their coffee shops. Now that they're getting a bit of capital, they'll certainly have the finance to do so. And either way, it's a good story for the market to get excited about, investors to reward them a premium valuation, and help actually finance their ambitions and make it a reality. As that's really the point of having investors to begin with. And so as you guys know, I'm in rich tech robotics. This is not just a swing trade for me. I plan on holding it for a while. Who knows, maybe years. I've got a few other robotics stocks as part of my stock picks portfolio. But of course, the big one for me is Tesla, who just like electric vehicles, I think they're going to dominate with robotics as well. And just speaking of Serve, I don't have a position with them. I was considering writing some puts on them today. However, I thought this news is still fresh. We're not dramatically oversold here on my indicators. Maybe if this continues pulling back into the 12s, 11s, who knows, maybe around $10 a share, I might consider initiating a long position. Same deal with SoundHound AI. We're not terribly oversold here, minus 9.8 on my DSI. If that were to go into single digits next week, again, just ahead of their earnings as well, I may consider initiating position because this is another exciting company offering voice AI. And so I think this is a big secular trend. I plan on investing in robotics stocks for years and years to come. And so I don't mind picking up a handful of different ones. But like you guys know, my big one's Tesla, because typically, looking back in history, the leaders typically continue to win and dominate. And so we're just kind of bumping around here at 355 a share. We did get down 320 pre-market on the 12th there. And this pullback, or little scare of late, has largely been on the narrative that Tesla year-to-date volumes are down 40% or so in Europe due to Elon Musk's involvement with Doge and the potential brand impact on that, which I think is ridiculous. The reality is, just like we've been seeing in other markets around the world, Model Y customers are waiting for the new refreshed Model Y, Juniper, to become available, which should happen later this month. A lot of people going to Tesla dealerships and the dealers are telling them that just to wait, come back. And so all these customers are deferring delivery, which should actually happen later this month into March. But no doubt the European economy as well, consumer spending is also a bit soft. But just the idea that Elon's efforts to cut wasteful government spending is hurting Tesla's brand long term, I think is absurd. And like I said, just offering up another opportunity to the optimists who believe in this brand instead of just constantly hating on it. And like I said, the lead up to Optimus Bot being launched next year could create an epic bull market and related robotic stocks. And so that's what I'm positioning for now. And like we saw today with Serve, no doubt won't be the last negative headline we get, spook the market. Like I said, they can offer up good opportunities to buy the dip, buy the shares from those getting shaken out purely just based on price action, because that's all they follow. They don't know how to actually understand the driving fundamentals of the stock in the market. But yeah, no doubt losing NVIDIA, like I said, did deserve to be marked down today. But I think the bigger news story, more impactful long term, is Meta, and indicating they're going to spend billions and billions trying to get into humanoids as well. Could be another arms race. And like I said, just creates more money, capital, attention, resources to really help all this stuff get going. Along with Figure AI and their recent valuation and their big news coming out, I think the horizon for robotics still looks really good. So this is just another short-term blip, in my opinion. Like I said, it could run a bit further next week, which if it does, I'm going to look to initiate a position and Serve Robotics and potentially SoundHound AI as well. Although not a robotics stock, still one I find really interesting, as I think voice AI is inevitable as well, going through restaurant drive-thrus, customer service, etc. So we'll keep an eye on those stocks and stick with me because I'll show you another stock in a different industry, but I think is really starting to light up today as well. First, let's just step back from the new economy and go back into the old economy and look at some of the moves some billionaire investors have been making of late as we continue to get the latest updates on their portfolios that we get every quarter. Just looking at Buffett's portfolio that he runs in Berkshire Hathaway. He owns a collection of businesses outright, and he's always held a vast portfolio of stocks and bonds. Just looking in Q4 last year, his biggest increase was in Domino's Pizza. And there's a look at Domino's on the chart. Did get knocked down there last year, consolidated. Buffett's obviously got in there and bought the dip somewhere around here. And we've just broken out this week, actually. He also added 48% to Pull. As the name suggests, they're involved in the distribution of pulls and products associated with that. Again, another stock that's been consolidating for some time. He obviously likes the valuation and qualities of the business, or his lieutenants, Ted and Todd do. Sirius, VeriSign, and one of his favorite ones he's been buying the dip on for a few years now. Occidental Petroleum, Oxy. And I was actually suggesting that back in mid-December. Said back then, I wonder if Buffett's buying the dip again. Every time we were getting oversold, he's been buying. I think he's still underwater on his average price, as it has been weak for some time. But like my fundamental indicators suggest, it is good value and a high quality business. Really good shareholder yield there, 7%. And for those of you who don't know, shareholder yield, that's like a modern day dividend yield. Kind of looks at what return a shareholder is getting from the company as it combines dividend yield, stock buyback yield, and debt paydown yield over the last 12 months. So a shareholder yield of 7%, that's pretty good when you got the 10-year at 4.5. I can see why the old man is buying the dip on this. And it's not a bad idea to have a few oil stocks in a portfolio. They provide for good diversification. For example, in 2022, the market was down. Energy sector ETF XLE was up 50%. Oil stocks were the place to be in 2022. And it kind of hedges your portfolio because if oil rips, that can hurt other parts of your portfolio, where that obviously helps oil stocks. Also interesting to note, he sold out of his S&P 500 fund, had small positions there. I think maybe because he's always preaching, most people, unless you're actively involved in investing, you should just own an index fund. But now it appears to have sold them all, along with reducing some exposure to financials. Bank of America, Capital One, and Citigroup. Financials have been really hot of late, maybe taking a few chips off the table there. There's the financial sector, one of the best performing. Also interesting to see, one of the biggest hedge funds in the world, created by billionaire Ray Dalio, Bridgewater Associates, making a new bet on Tesla. And so maybe them too are positioning for a new future just around the corner with robo-taxis, including energy and storage prospects, not to mention the Optimus bot. Like I said, I think this is the most exciting time for us Tesla shareholders. Really hope we get a dip under $300 a share actually. We're also getting news of more and more investment coming to the States. Trump is rounding up world leaders, business figures all over the place, and persuading them to invest more in the States. We've got Taiwan, critical part of the global supply chain for advanced AI chips. So they're going to invest more in the US and potentially partnering up with Intel. Look at that. That's great for us Intel shareholders as well. When your stock's backed by the government, that's a nice bid to lean against. And there's a look at Taiwan Semi. Still hasn't recovered from that deep seat gap down. Big chip stocks just kind of stumbling and consolidating here. And there's Intel taking a bit of a well-earned breather today after one of its best one-week performances ever, ripping up after that little dip after earnings. AMD as well, just slightly drifting higher on low volume. Wouldn't be surprised if we come down and retest these lows from the day after earnings, see whether the buyers can come and step in there again, like they did right off the open after earnings, chewing through a lot of offers, creating all that volume. And so like I said, Chinese stocks have been really hot these last couple of weeks. Another great gotcha moment by the market. At the start of what could be a nasty US-China trade war, we've got Chinese stocks ripping. Now we just got news, President Xi will be meeting with Alibaba founder Jack Ma as soon as next week, which is pretty symbolic. Remember over the last couple of years, probably due to the CCP's insecurity, they saw their big tech companies growing leaps and bounds, and Jack Ma came out and spoke about deregulation of the financial sector. Really spooked them. They clamped down on him and the entire sector. As they were already growing well, so they switched their focus to regulation, which then actually caused a bit of a bear market and flight of capital, which probably reached a capitulation moment early last year. So they shut up Jack Ma. Haven't heard or seen from him for a long time. However, it looks like maybe Xi could be extending the olive branch here, maybe even acknowledging Jack Ma was right, because this has knocked China back a bit. As like I said before this, they were coming in real hot, launch an ant IPO, and so this should be interpreted as a sign of renewed policy support, which like I've been saying, the Chinese are really trying to get underneath their markets. And look at this, Alibaba, again today, 4.3%. Absolutely marching, walking the line. We got earnings next week, which should be interesting. Also nice to see Tiger Brokers breaking out today. Monster gap up. Took out that 9 level, but just finished just below it. So that's a good technical sign there. And the other Chinese stock I said on Wednesday, I said it's looking good going into earnings. And I wouldn't be surprised if we get another gap up with their earnings early next week as well. Baidu potentially starting to break out here. Also the one I told you guys on Monday, Pony AI, Chinese AI company, did indeed break out this week. And another monster week for a stock I just gave out to StockPicks members not even a month ago on the 27th of January. And I bought it the next day, Monday the 28th. Believe it or not, already up over 70%. That's Chinese stocks for you. When they run, they just run like crazy. So I haven't even held it for a month and we're up 70% on it. I got another good one going out this Sunday morning. And so if you'd like to receive my deep dive report on that in your inbox this Sunday morning, click the link below this video and sign up to my stock pick service. So like I said, we had another monster week, portfolio up around 5% just on this week alone. So even though the small cap Russell index still a bit off highs, like I said, underneath the hood, small cap growth stocks are absolutely ripping. What's also ripping today, and the stock I alluded to earlier on in this video that I said is showing similar characteristics to Robinhood, is DraftKings. So they have an online betting app, and like I said, very similar to Robinhood. Easy to access, well-known brand, the explosion of real money gaming. It's pretty much what crypto is, meme stocks, all this stuff. And sure, we'll see waves of up and down in the short term, but this is another secular trend that's not going away. It's only accelerating. And so just going out to a monthly chart in DraftKings, similar to Robinhood, was whacked down there, like a lot of growth stocks were after they peaked in early mid-21, bottomed out and starting to rip up. You compare that to Robinhood, monster rip off the lows here. Now with a market cap of $57 billion and revenue of $3 billion the last 12 months. DraftKings current market cap $26 billion and revenue just under $5 billion over the last 12 months. About half the size of Robinhood and more than 50% in sales. But like I said, very similar characteristics. So even though it's running now, technically it's just broken out, I wouldn't be surprised in the coming weeks, month or so, if we take out all-time highs on this as well, because like we can see, there's plenty of momentum in the market for the right names. And just like we've seen from Hims and Hers Health of their really effective ad, DraftKings also did well from the Super Bowl as their sports betting app reached #1 in in the App Store in the sports category, and number 3 across all apps on Super Bowl Sunday. So this is kind of becoming mainstream, a household brand. They also set a new daily record, took in $436 million in bets. It's incredible, $500 million in one day. So we'll keep an eye on DraftKings, market cap $26 billion. Any consolidations, pullbacks may indeed offer up a buy the dip opportunity. Another one we've been following, Moderna, which I've been buying the dip on, came out with their earnings today. Lost a lot of money this last quarter compared to their previous quarter, where they came in with 3 cents per share in earnings. However, like I've been saying, they're going through a bit of short-term pain at the moment here. But I'm not betting on the next quarter. I'm betting on the next 10 years with this company. And technically speaking, it's always darkest before dawn. And I can see a lot of accumulation going on here with me being part of that as well. So I still like it in the low 30s, but for sure, this stock is not for the faint of heart. Massive volatility. One of the most important economic prints for the week came in today. Retail sales did come in lower than expected. Sales at US retailers sank 0.9% in January. Economists were expecting a 0.2% decline. So that looks bad on the headline. However, again, you want to pay attention to the details because I don't think there's any really cause for alarm. We had auto sales tanking in January after an unusual surge in December due to fat dealer incentives, but also the big reason was bad weather. Much of the states were experiencing severe winter weather throughout January, and so that obviously can keep a lot of people indoors, going out and doing retail spending. Also came off a bumper November, December holiday spending period, so there's probably a bit of credit card hangover. People blowing out their limit, having to pay it back. We also had massive wildfires in California. Probably also put a little bit of a dent on retail sales. But like I said, if you take out auto sales, retail sales only slid a smaller 0.4%. And again, looking underneath the hood, restaurant sales actually grew 1%. So that's a good discretionary sign. Retail sector as a whole actually gapped up this morning, pretty much finished flat there today. So like I said, I wouldn't read too much into that 0.9% drop. It's just a bad headline and pretty much just that. These prints can swing around quite a lot month to month. It's more the moving averages that we pay attention to. And so when you look at year over year sales, they're still actually uptrending, annualized 4.2%, which is pretty good and a healthy margin above inflation. But the headline, including that softness from PPI yesterday, was enough to get yields dropping again today in treasuries. After CPI came in a little hot on Wednesday, got a little bit of a bump up, especially in the long end of the curve. However, they did a bit of a U-turn on PPI yesterday and continued today. See that there in the 10-year 447 and the 2-year today 426, continuing to bump around here on yields. And just looking at Fed Fund futures, they actually dialed it in a bit as well today, thinking we may get a cut in May, which I wouldn't rule out. Like I've been showing of late, trueflation readings have been coming down a lot, just tracking above 2%. And if the US government is going to spend significantly less going forward, I mean, the Fed could indeed factor that into their forecasts and instead do what any good investor does and be proactive instead of reactive. Because when you're reactive, you're always late. You got to set the trend, not react to it. And especially with low oil, I mean, at 425, the Fed could indeed trim down to 4. 2 years not that far apart, pretty much almost there already. So we'll see what happens. I'm expecting good CPI print next month. Got a big divergence with trueflation. And Goldman Sachs, they expect core PCE inflation, which combines CPI and PPI, to be near 2% by year end, excluding tariffs. The whole tariff thing might actually be a bit overblown. Trump might actually be successful in using them as a negotiation tactics to level the playing field with the state's biggest trading partners, who on average place much higher tariffs on imports of US goods. So whilst I still think the risks remain to the upside more so than the downside at this stage, inflation could very well flatline here, could continue basing around 2.5, high 2s for the rest of the year. And who knows, if Goldman Sachs is right, potentially even go down into the low 2s heading into 2026. Wouldn't that be nice? An Indian Prime Minister Modi just met with Trump yesterday. And again, another big blockbuster number coming out of the meeting. India and the US will work to more than double bilateral trade to $500 billion by 2030. Trump acknowledged India's recent move to reduce tariffs on select imports and said he would begin talks on disparities on trade and hope to reach an agreement. India does place pretty high tariffs on US goods. I think the average is somewhere around 12%. US will also increase its military sales to India. And so that's what Trump's trying to do. He's trying to help out US exporters so they can sell more goods overseas. You just got to reduce that hurdle to do so with the tariffs placed on US imports. So again, this might actually work out as intended and could actually turn out to be a strong tailwind for the US economy. Also continue to see a little bit of weakness in the dollar. That's going to be good for stocks if they can hold up. And again, good for US exporters as well. Makes it cheaper for foreign countries to buy US goods. But like I've been saying, this tariff thing is going to take a few months. We won't actually know to probably April. As Trump said yesterday, federal agencies will first conduct studies on how to best update tariffs on other countries to match the rates imposed on the US. But we very well could have good deals done before then. Also interesting to see one of the largest sovereign wealth funds in the world coming out of Abu Dhabi, making a $436 million investment into a Bitcoin ETF. The iShares Bitcoin Trust might have helped out. The crypto today did get a little bit of a bump up after it was pretty soft yesterday when we had a good risk on rally, just kind of been flat. Did have a little pop there today, but nothing too notable. Still consolidating, but not all that far off all-time highs either. Did see a pretty sharp reversal in gold, even though the dollar fell. Maybe a bit of profit taking, like I've been saying of late, got a little technically stretched there. Reversal signals firing off, maybe back down to the 50-day VWAP over the coming days, week or two. But agricultural commodities, DBA, still sitting at 52-week highs, and silver, look at that, starting to get some funny business here, like we have been for the last few weeks. Record short borrowing fees, silver vaults being emptied, exchanges and brokers increasing their margins. Now we got this funny looking spike here today. This thing could go into a squeeze at any time as well. Looking back in silver's history, it can get quite volatile. Staying on commodities, we've got orange juice getting absolutely pummeled, but very technically oversold. 27% below the 50-day VWAP, fourth consecutive reversal signal. Plus, we've got bullish seasonality. If I traded commodity futures, I'd probably initiate a long position here for a mean reversion trade back to the 50-day. And that's the thing about commodities. They have really low correlation with one another. Unlike the stock market, they can kind of move like a school of fish, especially when fear spikes. Correlations move towards one. Commodities, one can be getting absolutely created, the other one can be absolutely ripping. Look at coffee, been on a tear of late, consolidating here in the last few days, and that was one of the best performing commodities last year actually. We also heard news a few days ago, Charles Schwab, one of the biggest online brokers in the States, jumping on board and now going to offer all their clients 24-hour trading from Monday to Friday. It's a new trend. Robinhood and a few others on these new overnight electronic exchanges opening up. This is a long-term trend. Easier access, around-the-clock trading. Keep in mind there'll always be an official open and close, which is important to a lot of financial products, funds, mutual funds, who have to have a mark-to-market for their NAVs, net asset values. Opening and closing auction is also where a lot of big institutions can do their block trades because you just get that one official print. You don't pay a spread. Market makers will match your bids and offers in order to get the most volume done. So there'll always be big volume on the open and close and around that time. But trading for stocks is pretty much moving to 24 hours for more and more stocks, more and more brokers. And we're about to get some competition for New York coming out of Texas. We heard this late last year, partnership with BlackRock, Citadel, looking to start a Texas stock exchange. Now the Intercontinental Exchange, ICE, which owns NYSE. They're going to go right there with them as well. And they too also want to open up a Texas stock exchange. They're not just going to sit back and let some competitor come in there. So that's going to be interesting. And at the end of the day, just good for us investors. More exchanges results in more access, more liquidity, lower trading costs, more competition for our trades, not to mention helping to raise more capital for innovation and kind of take a swipe at New York's monopoly as well, which is also liable to the state's politics. And just a few interesting infographics for you guys here as I wrap it up. Global fossil fuel production, if we could visualize that. This is based on 2021 numbers, would be pretty similar of late. So reference, that's the Burj Khalifa, the tallest building in the world, coming out of the United Arab Emirates at 830 meters high, which from our American friends is about 2,700 feet. It's about 3.2 feet to a meter. Now look at that for comparison. The amount of coal the world produced just in 2021, 9.8 billion cubic meters. It would stand 2,141 meters high, about 7,000 feet. LNG almost the same, and crude oil a little bit smaller. But isn't that amazing? That's what us humans pull out of the ground every year and burn up. Like I say, it'll inevitably run out, whether we like it or not. We'll have to switch over to renewable energy using the sun, wind, the ocean, but also digging up uranium, which is much more efficient. Probably the same amount of uranium and just one of these small buildings could give more energy output than all this coal, LNG, and oil. Not to mention being a whole lot cleaner. And speaking of solar and wind, still the predominant clean energy sources. Again, in 2021, taken together, they are now the fourth largest source of electricity behind coal, gas, and hydro. Wind and solar share of electricity generation in the States, 13%, same as Brazil. We've got Spain there at 32%, China at 11%. Germans are big on wind, 28%, Australia 21%, and all these numbers probably a bit higher now. As like I said, these stats are a few years old. However, the world is inevitably becoming more and more green, but fossil fuels are not going anywhere anytime soon either. Just a reminder, the stock market will be closed on President's Day this coming Monday. In honor of those who have held the office of US President, bond markets are closed as well. They'll all be back open up on Tuesday. And looking at option dealers pricing, they're saying we're in for a pretty quiet start on the week as volatility is getting sucked out of this market again, as we're pretty much sitting smack bang at all-time highs. That's all I got for you guys this week. Thanks very much for sticking with Click Capital. Enjoy your long weekend away from the markets, and I look forward to seeing you all back here come Tuesday night. Cheers.